Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. Markets reached new highs, but not without taking pause at sobering economic news. On Monday, news from the National Retail Federation showed that retail traffic at stores and online over the 4-day Thanksgiving holiday weekend were down 5.2% from last year. In addition, total spending for the weekend is expected to drop 11%. Also, Markit's November Purchasing Managers Index for the Eurozone was 50.1, its lowest level since June of 2013, and China didn't fare any better, coming in at 50. Anything above 50 indicates expansion, while below 50 indicates contraction. The only good news was the Institute for Supply Management's November index, and it didn't drop as much as expected and remained strong at 58.7. On Tuesday, the Dow Industrials closed at a record high on news of strong auto sales. In November, vehicle sales rose 4.2% to 17.2 million units, higher than expectations, and the strongest growth for the month since 2003. On Wednesday, the Dow Industrials and the S&P 500 closed at record highs due to encouraging economic reports. The Federal Reserve released their latest beige book showing inflation remains under control, the job market continues to improve, lower gas prices, and they expect robust holiday spending. The ADP employment report for November came in at 208,000, lower than expectations, but still considered strong. The Institute for Supply Management's November Services Index was 59.3, up from 57.1, and almost at its highest level in 9 years. On Thursday, news that the European Central Bank is expected to consider quantitative easing at its January meeting wasn't enough to keep the markets going up, and they closed the day slightly lower. Jobless claims for the week ending November 29th were 297,000, down from the prior week's 314,000. On Friday, non-farm payrolls for November soared, coming in at 321,000, up from 243,000, and dramatically above expectations. The unemployment rate remained unchanged at 5.8%. Markets were up modestly on the news. Now let's take a look at some stocks. JMP Securities issued a report Wednesday stating that Apple shares have significant upside potential with a new price target of 150, citing unexpectedly strong demand in both the US and China for the iPhone 6 and 6 Plus. All three major carriers in China are out of stock. Stores in the US have also had trouble keeping up with demand. Altogether, Apple's quarterly revenue could exceed $67 billion, beating the company's own guidance. Biogen IDEX shares rose Tuesday after the company reported that its Alzheimer's drug, BIIB037, helped reduce plaques in the brain, which is thought to be a key component in the disease. The company is now planning to implement a final stage study, but that is not expected to finish until 2017 or 18. Shares of Amazon slid the entire week following a shaky Black Friday and Cyber Monday. According to analysts, Amazon is feeling enormous pressure from traditional brick-and-mortar retailers moving into the online retail space. Abercrombie & Fitch announced late Wednesday that their third quarter revenue fell by over 11% year over year to $911 million, and earnings fell 19% to 42 cents per share. Teen-branded clothing has been struggling as the demographic continues to shift their preferences over to the styles offered by other European fashion houses like Zara and H&M. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.